Hello there. Welcome to Wealthy Investor TV. I'm your host, of course, the lovable Tyrone Jackson. Nice to see you. Hey, listen, today I thought I'd do something a little bit different, just spend a little bit of time with you answering some of the most frequently asked questions I get about both trading and investing. Because although you may already have a membership at WI Trade School, I noticed that over time I get the same trading questions over and over and over again. So I wanted to share with you some of those questions and answer them for you right here in this format. So what do you say we just get started? One of the number one questions I always get starts off almost always like this. Hey, Tyrone, why is it you only trade stocks that are members of the Dow Jones Industrial Average or the S&P 500? Well, you know, the question is really simple, and so is the answer, because those stocks have the lowest risk in the stock market. Now, it's not that I'm at all afraid of losing money, but if there are a group of stocks that are actually of lower risk, like those Dow Jones stocks, you know, there's only 30 of them. And in the S&P, that also includes the Dow Jones Industrial Average. Well, there's a lot of money to be made off of small movements of the stock as a trader, and certainly small movements in the stock as an options trader. So I always say in my live classes, I'd rather study once and get paid twice, because I can trade a stock and I can also trade the option on the stock. And as most of you know by now, I am a huge leaps options trader. And what is a leaps option? It is an option on the stock that has at least a year before it expires. So that's why I love that trade. That really helps. The other question that I get a lot here is, why is it you don't like day trading? Now, let me clear this up right here. It's not that I don't like day trading, but day trading is a job. Why? Because it requires that you sit at a computer screen all day and you actually wait for what? A stock to move up 25 cents so you can sell it and buy it back, and move up 25 cents and sell it and buy it back. Well, that is a job. And I basically don't like sitting at a computer all day. I like being out at the gym, shopping for clothes, doing whatever it is I plan to do in my day, and software is making the money for me by using something called automated trades. What are automated trades? An automated trade, for those of you who understand, would be something like, depending upon the platform, if you're on the TD Ameritrade platform, it's called a trade trigger. If you're on just a standard platform, it's called a limit order. You see, I'd like to buy a stock and let the software trade the stock for me when the stock moves up, let's say, $1 or so. I then get an alert on my cell phone, and that alert tells me that the stock has been sold. So if I can be out enjoying my life and with 100 shares make $100, or with 1,000 shares make $1,000 because volatility is present, well, that's better than sitting at a computer all day. The next question goes something like this. Hey, Tyrone, can you please explain what volatility is and how I can profit from it? Okay, well, here's the answer to that. What is volatility? Volatility is simply the rapid movement of a stock because institutions or software is trading it very, very, very quickly. So certain stocks are a little bit more volatile than others, and we find that volatility by doing something called back testing. So one of the things that I teach in my live classes is, how do you learn how to back test a stock so that you can measure that movement that is constantly happening and decide, is this a candidate for a stock I want to hold for the long term, or does this stock make a good volatility trade? Now, here's what some of my students have to say about volatility trading. You love volatility trading.
When volatility is working, it's the best.
It is hot.
It's hot.
Yes.
It's people like, oh, well, that's gambling. Okay, for argument's sake, let's say that it kind of is, but there's a little bit more to it.
Right.
There's definitely a little bit of thinking behind it, because you have to follow the company or the stock you're working with. You have to see what's going on. You know, as we got better financially educated again, you see these trends of what this company is doing and how it works. Very simple. Again, it's very simple math and a lot of visual, right? We look at our picture and we have our math. So those things come to play. But when volatility is there,
yes,
it's hot.
Being in the mentor program, I like to volatility trade more of a leap option,
right,
than the shares.
Right, because the shares, get old after a while, or what?
Well, it's about leverage too. You leverage less when you're volatility trading leaps versus the shares. So with the shares, I like just writing covered calls, and then after I sell that covered call, I'll purchase a few leaps. If
Right. You'll use the cover call premium to finance a leaps option.
Right.
Lower your risk that way.
Yeah.
The next question that I get is about trends. Now, I like stocks that are in strong upward trend. Take a look at this chart. This is a stock that over 5 years, notice how overall, even though the stock goes up and down, notice how the trend is always up. Now, why do I like stocks that are upward trending? Very simple, because it means that there's a lot of institutional money. A lot of people think a stock goes up because they actually move the stock, and that's not really what it is at all. I like for you to constantly pick stocks that are winners. We call them good date, in part because the institutions are buying millions of shares per day. So it's actually not enough that you and I actually like a stock. The most important thing is that the institutions like it too. Why? Because I may be buying 1,000 shares or 1,500 shares, but the institutions are buying how much? 1 million, 2 million, 3 million shares a day. So that is very, very, very important. I'm going to talk about some other questions that I get asked more on advanced trading when it comes to options right after you take a look at this. My first really big trade, I made $1,500 in like 72 hours. It wasn't so much that the $1,500 was going to set me free financially. It's that I could do that every single week. And if I could learn a system that was consistent, you're at $6,000 per month, $70,000 a year, I was hooked. But I always remember where it begins. And that's what I teach people to do in the Wealthy Investor Program. I was very afraid when I first started teaching online and we launched WI Trade School because I couldn't see people, right? So people are logging in, they're watching all my major strategies, they're sending me questions, I'm answering their questions, I'm giving them new trades every single week. But the emails that we get are just amazing. Thank you, you've changed my life. And to me, that is like the greatest thing. We're one of the fastest growing subscription-based websites for stock market trading on the internet, period. All you have to do is follow my trades and celebrate your success. Welcome back to Wealthy Investor TV. Now, let's continue our lesson about upward trading stocks, and then I'll talk to you about options. Now, take a look at this stock. This is a 5-year chart of a member of the Dow Jones Industrial Average. This is the Walt Disney Company, ticker symbol DIS. Now, I've liked this stock for a long time. Why? Well, in the Wealthy Investor Program, we have a saying, don't buy the stock unless, of course, you understand the story. Disney is in the real estate business with their theme parks. They're in the motion picture business, making movies and making money off of box office and ticket sales, right? And they're also in the business of hotels. So Disney Resorts is basically like a real estate play. So if you really look at Disney's portfolio, a lot of it is based on real estate. And then finally, they own the ABC television network, which means that they're in the what? The advertising business. So over the last 5 years, that's done very well for the Walt Disney Company. And it's a stock that anyone can hold up until recently. So I would call Disney a good date up until recently. But let me show you a stock that I've also liked over the last 2 to 5 years. This picture that you're looking at now is a 5-year chart of a company called Netflix, ticker symbol NFLX. Now look at the explosive growth in this stock and what you could have paid for it around $11 a share about 5 years ago. I like this company not only because the chart is upward trending, but I also like it because of the story. You see, Netflix makes its money off of subscribers, right? The more subscribers you have, the more profit you have. Quarter over quarter, year over year, their subscriber growth keeps getting bigger and bigger and bigger. Now, if more people are paying you, that means what? More revenue, more income that you're actually generating. And then after all of your expenses there, your earnings. So these are just two wonderful examples of stocks that have gone wild. So if they're going wild and the institutions like them, you see, there's no need for me to touch penny stocks or stocks that have no name and no revenue, hoping that they double when there are all these great stocks out there that I think you and I should own and benefit from. Now, the next question I want to address is about options trading. A lot of people write in and they ask, Tyrone, why do you prefer leaps options over shorter dated options? Okay, now this answer's a little bit involved, but if you've been watching and paying attention to the Wealthy Investor Approach, you know that when you buy an option is something that ultimately expires because you're buying the right to the stock and not the actual stock. But if you give yourself time to be right about a small movement in the stock, $2, $3, maybe even $4 in the stock, and you have a year to be right on the option side, well, you know what I know. You could make a lot of money just trading leaps options. And my leaps options trading system is something that I go through all the time in my online course. Leaps options, in short, give you time to be right about a small movement in the stock that can bring you profit. Now, here's what a few of my students who are some of my recent guests said about their success as options traders.
A lot of it's mindset. I would say 80 to 90% of it is mindset, because I would get really nervous about pushing that button and spending that money. And then suddenly the amount that I would spend when I pushed the button would not really matter anymore. It's just kind of I know the fundamentals. I know what I'm doing has sound principles. I've done this over and over again. Tyrone's there if I need help. And I just push the button. And even like when I had that big day where I made almost $11,000, I was not emotional about it. I mean, I was a little happy inside, but I was also just kind of like, okay, what's next?
Options tradings. Do you like leaps?
Absolutely.
Okay. Why do you like leaps options?
Because it's fast, sexy money, for
Yes.
one. But I just enjoy watching how it works. Lots of times I'll just actually watch the stock go up and down and see how it affects the leaps a little bit. And other than that, it's something that can be in and out really quickly.
Yes.
But if you're not, it's not the worst thing in the world. You can
Right.
let it sit and, exercise it when you're ready.
Yes. Your favorite options trade? I'll name 3. Bull call spread, calendar spread, or just leaps themselves?
Just lease themselves.
Okay. And why is that?
I really enjoy actually buying them and selling a covered call.
Okay.
They work really well together.
Wait, you mean selling a cover call and then buying a leaps?
Yes.
So that way, if the stock moves past the strike, you're still participating with the leaps?
Absolutely.
And finally, the next question that I have is, Tyrone, why don't you talk a little bit more about options and spreads? Well, the answer to that question is pretty simple. Why? Well, most people don't do well trading spreads. Now, there are 2 spreads that I focus on the most. One is called a calendar spread, which is when you're selling a call against a longer dated call, usually a leaps option. And the other one is a bear call spread. Now, I like bear call spreads with stocks that don't move because it allows me to write one call against another call, and they're both shorter dated, and if I let those expire, I get to keep the difference. The only thing that I've learned from teaching for 10 years and trading for 20 years is most of my students who have lives don't do very well with bear call spreads. One other thing about spreads, some of your brokers want you to learn spread trades and they'll tease you with how profitable it can actually be. But one of the things I want you to know is that spreads do carry some risk and they require that you, how can I say this, babysit a trade a little bit more. I like automated trades that bring profits on a predictable basis, whether the stock goes up, goes down, or stays the same. So what I teach you in the Wealthy Investor Program are ways in which you can make money, trade less, and increase your profits. Why? Because that's called trading around your lifestyle. And if you want more time with your family, if you don't want to be stuck at a computer all day, the stock market is one tool that can help bring you financial freedom over and over again once you get that financial education. I think one of the reasons that I've been so successful with my program online is everyone says to me, Tyrone, you just make it all so easy to understand. I am really here not to impress you with how smart I am, but to show you there really are opportunities other than owning real estate and being a landlord. There really are other opportunities in the stock market that will be here for the next 5, 10, 15, even 20 years. And guess what? I want you to be able to take advantage of it. So if you like following me online and you want to be able to follow my trades, make sure you log on to witradeschool.com. That's witradeschool.com. If you really are curious and you really want to learn the stock market in a way that's simple and easy to understand, I'd like to invite you to start your membership there right now. That way, you and I can start our partnership in working together right now, today. Hey, listen, that's going to do it for me on this episode of Wealthy Investor TV. If you're curious about anything or any of the strategies that you've seen here today, guess what? You become a member of WI Trade School, you send me your questions, and I'll be able to answer them for you in my weekly vlog. Remember, your wealth is in your thinking. Stay away from negative people, move towards positive people, and you'll see some wonderful positive results in your life. Tyrone Jackson, the Wealthy Investor, saying, I'll see you on the other side of the trade.